Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Welcome to another video on your channel Profit Equities. In this video, we'll be talking about a small cap which is down 12% over the last 2 days due to a whistleblower complaint, and where HDFC Mutual Fund account arbitrage fund has bought 3,59,800 shares at rupees 882.72 yesterday. Now friends, we also run a couple of very successful Telegram groups and channels where we discuss profitable stock opportunities. Over the last few months, we have successfully outperformed the market, where in the investing group, we have positive returns, and in the trading group, we have almost doubled our money. If you want to go ahead and join our Telegram group, please go ahead and open a completely free Demat and trading account through the link present in the pinned comment or in the description of the video. You can also choose to join the group by becoming a YouTube channel member by clicking on the join button, or by becoming a patron on Patreon. The link for all of these are present in the description of the video. Please watch this video to know more about this stock. Now the company in question is Multi Commodity Exchange of India Limited, which is available at rupees 868.90, and the face value for it is 10. Now this is better known as MCX. Now Multi Commodity Exchange of India Limited is a holding company engaged in facilitating trading and clearing and settlement of commodity derivatives. It operates as a commodity futures exchange. Now, as is evident from the 1-year chart, this company has been on a consistently beautiful uptrend for the majority of the year. However, over the last 2 days, this stock has had a fall to the tune of 12%. This happened after news of a whistleblower complaint became public. Now, the market cap of the company is 4,431.25 crores, which means that this company is a small cap one. The EPS of 35.80 translates into a price to earnings ratio of 24.27, which is largely in line with the industry price to earnings ratio of 22.38. The price to book ratio of 3.54 is also slightly expensive. Now the dividend yield here is decent at 2.30%, whereas none of the original promoters of the company hold any stake after the financial technologies fiasco. Please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended only to be a piece of news. Thanks for watching, and if you have not already subscribed to this channel, please consider doing so.